Hey all, good morning and welcome to ShareTreck. This is Raj here, and it's the 10th of July, 2022, and it happens to be birthday of Nicola Tesla. So happy birthday to Nicola Tesla, wherever he is, a brilliant guy. So we have a statue of Nicola Tesla at Niagara. So if you ever visit Niagara on the Canadian side, be sure to check out his statue. It's brilliant, looks nice. With that said, today's video is going to be talking about three things. The first one is going to be my confusion regarding what's happening with the market. Are we in a recession or are we out of the recession? What's happening with the market? Second is, have we touched the bottom of the market yet? And I'm also going to look at a couple of press reports. And then the third one is going to be about a very interesting case where a husband-wife couple, both professors, the wife being a infectious disease specialist, and the husband, a professor of psychiatry. They went on a vacation to the Middle East, and he caught a bacteria which was antibiotic resistant, and she found a solution for that with phages. It's of interest to us. None of the companies in our watch list are doing anything like this, but still it is genomics at action, and she managed to save her husband's life from the brink of death. It's a wonderful story. I put the link in the description below so you can go and have a look at it in detail. With that said, let's get started. Well, let's get started with the indicators. And here we can see that US oil has been consistently coming down. And as I mentioned in one of my earlier sessions, that it will definitely go below 100. So it did go below 100. It got pushed up from 95.08. And it's back up again, and this diagonal channel, which was a resistance earlier, has now become a support. And we have another line of resistance up here on the top, along with one more resistance at 107.52. So suffice to say that oil is going to face stiff resistance on its way up. That is number one. Number two, across the world, central banks are raising interest rates, and as a result of which, there's huge demand destruction. When the demand destruction happens, it's supposed to lead to unemployment because people are not going to be buying stuff, and therefore manufacturers are not going to be able to sell enough stuff, and so they will cut capacity. So that's what is expected to happen. So when people become unemployed, they drive less, and factories use less fuel, and freight transport also reduces, and overall the demand for oil goes down. And that's what we have to see in oil prices, given the fact that there's demand destruction going on. The second thing that happens due to demand destruction is we move towards a recession. And when recession happens, there is high level of unemployment, and the prices start going down because there is no demand for goods. And the government has to stimulate the economy by reducing interest rates and pushing up demand, and thereby making the economic cycle turn upwards. And that's when oil prices, copper prices, everything will start going up. So this is the kind of cycle that we are generally used to when it comes to economic cycles, when you look at it in conjunction with stock market. Now, having said that, we are seeing one indicator going in the direction of showing a recession. That's oil prices are going down. But coming back to the indicators, let us then go and look at Dow Jones Industrial Average. So if you look at DIA has fallen at the most around 19.82%. It has never gone into the bear territory during this time period when all other indices have gone into the bear territory and dipped below 20% and then have come back up again. QQQ was the first one to drop, and then it came up again. SPY was much more resilient, but it also dropped to the bear market. So we have to see when Dow Jones Industrial Average will go to the bear market. And here we could potentially have some clues. We have a support here at 312.49. And if you see the last price action that we had, I'm going to expand the screen. Each of this candle is a one-day candle. And this was the candle for the 8th of July. And you can see it's a perfect doji candle with a very, very slim body, which means the price action was range bound, and it is within yesterday's range. Day before yesterday's price range, and therefore there wasn't much of a movement out here. It has support from the 9-day exponential moving average, and it has got a resistance from this diagonal line of support. So when the market resumes on 11th, we are going to be looking at this point out here, 317.40 as resistance for Dow Jones Industrial Average. And what do we have next week? Next week, we have got some bank earnings coming up. And if I was to look at the bank earnings, we have JP Morgan, which is reporting on the 14th, which happens to be next week. And we have got Citibank reporting on the 15th. So around 14th and 15th, I think we are likely to see some kind of movement happening in Dow Jones Industrial Average, which will give us an idea of what's happening in the market. So if the bank earnings report didn't turn out to be good, and if they start indicating a recession, then we are likely to bounce back from this line out here. So on 14th, our resistance is going to be at 315.47. So we are likely to push down from 315.47, break through this line of support at 312.49 and start coming down, and potentially breaking down below the 9-day exponential moving average, which is currently sitting at 311.29. And then we'll have to see if we can go all the way down and break below 20% so that we can call a bottom to the market. So that is one possibility. Whether it will happen or not, I don't know. Now, next, let us look at QQQ. QQQ has a resistance at the 50-day exponential moving average. That's also likely to push it down. Again, the bank results will also have an impact on QQQ, which is the NASDAQ proxy out here. And if we look at the put-call ratio, the put-call ratio is very close to neutral, but slightly bullish. And that doesn't indicate a recession to us. So potentially, when the market opens, we'll have to see what happens with this one, because it's not a live indicator, and it closed slightly bullish yesterday, but it has moved more towards neutral as I was predicting. So it's going to hover around the neutral area until it gets some decision through earnings reports. And then if we look at XLY and XLP, we can see that we are more risk on. That's why we see genomic stocks that are doing better. That's why we see tech stocks doing better. So the risk on aspect of it makes me feel that probably the market is not seeing a recession. But I personally feel that we are already in a recession. So if we are already in a recession, we should be seeing staples and defensives being stronger, but we are not seeing that. In fact, they have gone weak. So I don't know what is happening out there. So there's a bit of a confusion in my mind. I'm not able to relate them together and chart a particular course. If any of you have some ideas, please put it in the comment section so that we can consider what's happening. And after that, if I go to established technology stocks, I can see that FNGU, which is the FANG stock index, it's kind of an ETF which I use as a proxy for FANG stock. Of course, it's 3x leveraged, but it kind of exaggerates the movements. So we can see that the FANG stocks have been consolidating sideways, and they have a bottom out here below which they have not gone. And the bottom happens to be out here at around 6.82. So FANG stocks are moderating sideways. They are coiling sideways. So they are still trying to find a direction. They are probably having a bottom out here at 6.50. It has been validated twice, but the third time is the charm. If it gets validated 3 or 4 times, then we can say it is stronger. So there's a good chance that when they come down, they could go below this. We'll have to wait and watch what happens out there. And if I was to look at Google shares, Google is definitely going up, and it has got the 100-day exponential moving average to negotiate, but it has successfully got the 9-day, 20-day, and the 50-day exponential moving averages below it. So that's a show of strength. And a potential show of strength for Google also is this S mark out here, which shows that it's got a 20-to-1 split coming up. So whenever there's a split, the share prices spike initially and then they come down. So that kind of effect could probably be taking out here. And then we have the earnings coming up. This will again give us a very good idea of what is happening with the economy. because advertising revenues will show up here. And being a content producer, I keep track of what's happening in the YouTube revenue section, because that gives you an idea of how various channels are progressing. In this channel, my next target for us is to reach 1,000 subscriber level. So I try to see what are the trends. And what I have found out is that the advertisers are spending less on advertising, and therefore they have cut down what they are paying for ads on YouTube. And also the sponsorships, the channels which have got sponsorships, they are reporting that sponsors are cutting the rates and also the frequency of sponsorships. So things are drying up on the YouTube world, and many content creators might probably stop producing if it was their bread and butter. And only those people who are interested in being talking heads like me will continue with the channels. So some of those things are already happening on the YouTube side. So we'll find concrete evidence out here when Google reports, and I'll be looking at their YouTube earnings and see how they are doing, again, especially against TikTok, because their shorts has taken off. So it should give them a little bit of competition support against TikTok, but we'll have to see what happens here. And this will also potentially move the market. And then we have Apple. Apple is also doing well, and Apple is going to report somewhere on the 28th of July. So that will also have an impact on the market, because these are all strong companies. They indicate the direction that the market would go. And then we have Microsoft, which was marginally down 0.74%, but it did open lower and then went up. So that the candle still looks green out here. And it's got support from all the three exponential moving averages, 9, 20, and 50. So it's also looking strong. And this diagonal line of resistance, which we had before, is now a diagonal line of support for it. And the MACD is bullish and momentum is above average, though it's pointed down a little bit. So these are all looking strong. It doesn't look like it's recession. However, they are way off their all-time highs. So if we were to take a measurement from their very peak to where they went to the bottom, they had gone all the way to 30.99%. So 20% is our bear market. So we are already in bear market out here, but we have a bear market rally going on, which has gone beyond one of its level of resistances. So I'm saying that Microsoft also shows strength out here. So that's the overall look as far as the markets are concerned. Amazon also is doing pretty well overall, even though it has shown a marginal decline out here. It started low and it went up. It again has support from the 9-day and 20-day exponential moving average. It's not as strong as Apple or Microsoft or Google, because it doesn't have the support of the 50-day exponential moving average. But the earnings are coming up on 28th of July. That will give us an idea of how the retail environment is doing. It will also give us an idea of how e-commerce is doing, along with Walmart. If we check the Walmart results, that will give a clear idea of whether we are in recession or not. So we need to wait for some more economic data to come out. And generally the feeling I get is that Fed is going to keep on raising interest rates, because the other contrary indicator we have is that the employment report shows very strong employment. Unemployment is stubbornly stuck at 3.5%, which means that most people who want a job are getting a job. The labor market is still tight. And that would mean that employers are giving hiring incentives, and that's going to put more money in the pockets of people. So now we'll have a situation where employers will pay more and employees will spend more, and that's going to push the price up. Therefore, employers are going to jack up the price of their products, and this vicious cycle is going to continue. To break that, the Fed will definitely have to put a 75 basis point hike and destroy demand. And on top of this, we also know that the real wages are not catching up with the inflation. So even though wages are going up, the quality of living for the common man is going down. So with all these factors put together, it's a really confusing situation. So it's most likely to happen that the Fed will keep on increasing the 75 basis point hikes, and suddenly the economy will break and we'll go into recession. And then potentially the Fed will have to start reducing interest rate to stimulate demand and bring us back up again. How long is that going to take? I don't know. But that's definitely the trajectory that we are going in. And if I revisit my earlier thesis of us having reached the bottom by the third quarter, and then we starting to build a base and start moving up. I think that is quite possible. We are already in the middle of July, so we got August and September to go. So hopefully by September, we start seeing signs that the inflation has peaked. And in October, maybe the Fed can start signaling a more dovish approach, and that can start laying as a foundation. So I'm still hoping for that. But all these confusing indicators make me feel a little uncertain about it. So you guys can write what you think about the market in the comment section. That will give me an idea of how the community thinks. More minds are better than one. I'm also a regular investor like you. I'm not a great expert or anything. So your feedback is most welcome and can help me get much better points of view. So with that said, I'd just like to go to the headlines that I have seen here. One headline says the stock market faces next test as inflation looms over earnings season. So if earnings come out well and the inflation shows that inflation is still going up, what's going to happen? I don't know. The Fed is going to increase 75 basis point. So how is the market going to react? Is it going to react to the great earnings and say, let us push the stock price up? Or is it going to react to the Fed and say, Fed is going to raise 75 basis points, so I'm going to push this down? I don't know. And then the next one, stocks could drop another 20% from here if a recession ensures, Wall Street gurus say. So if the stocks are going to drop another 20% from here, then that will definitely take the Dow Jones Industrial Average into deep bear territory, which S&P 500 and NASDAQ have already visited. Especially NASDAQ has already visited the depths. It has gone below 30% and it's gone up again, but it's still way below 20. So I think NASDAQ probably would not take that big a beating as compared to Dow, because Dow has been resilient. S&P 500 has been resilient, so that could also take a little bit of a beating. But I think NASDAQ should come out slightly better than the other two. But who knows what's going to happen? Just throwing my thoughts out there. And then we have the superbug crisis thing. This is the happy couple here. This lady is a genius, and this guy is a professor of psychiatry. So no antibiotics work. So this woman turned a natural enemy of bacteria to save her husband's life. So what happened was he contracted a disease which is called as Iraqi bacter. It's found in the sands of the Middle East. The bacteria were blown into the wounds of American troops hit by roadside bombs during the Iraqi war, earning the pathogen the nickname Iraqi bacter. Veterans would get shrapnel in their legs and bodies from IED explosions, were medevaced home to convalesce, and unfortunately they brought the superbug with them. Sadly, many of them survived the bomb blast but died from this deadly bacterium. So that bacterium is absolutely antibiotic resistant. So the wife started searching for phages which kill bacteria, hoping that she could find a phage that can actually kill this particular bacteria. And her name is Strathdy, and she reached out to FDA for approval for a phage cocktail. Her own university found and gave her a bunch of phages that they thought would be candidates to work against this bacteria. And the FDA put her in touch with another organization, I think it is the Navy, which had a collection of phages. So she took some phages from there also, and they applied it against the bacteria and found the one that was very effective. And then she went and got approval from FDA, gave her husband a cocktail of those phages, and he recovered from the brink of death. So this is a very interesting story. Of course, this has got nothing to do with the genomics as such from the point of view of our companies in the watch list, but this is still genomics because the phages are the ones which have been able to kill the bacteria, and all the action that happened at the level of the DNA. So I think this is a story very interesting. I put the link in the description. Please check it out when you get some time. With that said, I would like to bring this session to an end. And if you haven't checked our video from yesterday, where I'm talking about 10 genome sequencing companies, which I'm going to profile in our upcoming Closer Look series. So I'll have at least 2 of them every week for you. That's the sector that we have to look at. So please go and check that video, and please put your comments out there. And with that, I think And with that, I think I would like to bring this video to an end, and I'll catch up with you again. Bye for now. Take care.